Hi everyone, a very good evening to all of you. Please let me know in the comment section whether my audio and video is clear or not so that we can have the class in a smooth and continuous manner without any disruption. I hope all of you are doing well. I hope you guys are studying. I'm meeting you all after a really long time, right? That was because I was on leave for a few days. Now we're going to be regular with our classes. I'll keep coming up with some sessions. Today we are going to talk about the RBI Bulletin of January. We are going to see the details of the bulletin. What is important from your exam point of view that we are going to take up from here. See, such kind of bulletins which are released, these are very important for one for your descriptive answer writing. Two, it is important that sometimes some words are mentioned over here or some portals are mentioned over here which can be asked in the MCQs as well. So we will get to know a lot about many different things in this bulletin. So there are certain articles and there are certain speeches in this bulletin which we are going to cover. All right. Now, there's one question over here which I'm going to ask you. But before that, if you want to download this YouTube class PDF, you can do it from the Oliveboard app. Just go to the courses section. There's going to be a separate YouTube class PDFs folder. From there, you can download the PDF. Or I will share the PDF on my Telegram handle. All right. Mannat Educator is my Telegram handle. You guys can connect with me over there. Okay, fine. Now, I have a question for all of you over here. Let's assume that a bank is profitable, very, very profitable. Okay, bank is doing good. It looks like it is at a very good spot as of now. But can this profitable bank, can this particular bank which is very profitable, can it fall apart in a single day today? In a single day, can this bank fall apart? That is a question that I have for you over here. And this question will be addressed today in this particular session. Fine. So, this is the question that I have for you. I'm giving you 1 minute to think. You can write down in the comment section and tell me that do you think that a profitable bank can fall apart in a single day or not? Till the time you guys are writing in the comment section, I will just start off with the introduction of the bulletin, that this is January 26 update. This bulletin is released every month. Okay, it gives a snapshot of all the conditions, macroeconomic conditions, or about the financial sector, or about how are the regulators thinking, what shift is there in the ideology of a regulator from before to as of now, and all these kind of things. Okay, and these are basically policy oriented speeches, and also these speeches, these articles are all policy oriented, so you will get to know an idea as to how the RBI is thinking, right? Okay, Garvit is saying yes ma'am, it can fall apart. So how can it fall apart, Garvit? Reason, I want the reason. You're saying yes, but what is the reason? So, this bulletin is talking about rapid digitalization, evolving supervisory challenge, and a resilient domestic growth outlook. So, यहाँ पे, let me be very clear over here, everyone. If I have to talk about this bulletin, the crux of this bulletin, before we dive into the depth of what is there in the bulletin, what is this talking about if I have to give you a gist? So, it is saying that before, the risks in the banking system or the financial system were different. Okay, the earlier risks were different. For example, the earlier risks were related to loans, related to capital, related to liquidity, right? But if I talk about the current scenario, if I talk about the risks as of now, today risks are related to AI, they are related to technology, they are related to data, they are related to cyber technology or cyber threats, they are related to fintechs. So, the risks that the banking sector or the financial system is facing is very, very different today. They have evolved today. And that is why, with the advent of new risks, the supervision or regulation should also change. Don't you think? Supervision and regulation should also change over a period of time because the risks are changing. So, supervision and regulation should also change. Finance is becoming digital today. So, finance is becoming digital today, and so the regulation and supervision should also change. So, we need a supervisory shift. We need a supervisory shift. Okay, because if I talk about the previous scenario, why do we need a supervisory shift? Because previous scenario was focusing on periodic inspections. Previous system was focusing on periodic inspection, but because that the finance system is very very digital today, that means continuous monitoring is required. And if continuous monitoring will not be there, then a profitable bank can fall apart within a single day as well. So, this that I have given you is a crux or the gist as to what this bulletin is discussing. At the end, I want you guys to stay put till the end. I am going to give you an easy trick as to how you can remember what this bulletin focuses upon and how can you use that in your answers. Okay? Fine, so let us begin. If some external agent internationally want to take them down, it can happen. But Garvit, we are talking about technology as of now. We are talking about digital frauds as of now, and that kind of risk, technology risk, is the risk which the financial system, the banking system is facing as of now, and that needs to be corrected, that needs to be monitored. Okay, so in this bulletin, firstly we have three speeches over here by Sanjay Malhotra ji: regulation and supervision. Then we have issues and challenges in the banking supervision. Then regulation in the digital era. These are the three uh, articles or the speeches that we're going to focus on. Okay? Right? Fine. So, firstly, the first article says, this is by Sri Sanjay Malhotra ji. He says how rapid digitalization is reshaping banking and financial intermediation. So that is what I'm saying, that today the banking and financial intermediation has become very different because of digitalization, right? It has become it has become very important for regulation and supervision in this digital era to change and to evolve. Hi Preeti. And to evolve, right? That means we have to focus on risk based, collaborative, proportionate supervision. So, what kind of supervision is required? Risk based supervision, collaborative. Collaboration between whom? Collaboration between the banks as well as RBI, because this problem cannot only be solved by RBI. We have to collaborate with the banks. So collaboration is required, and proportionate collaboration. That means proportionally both RBI and banks have to focus on this regulation and supervision so that faster risk transmission, cyber threats, customer protection concerns can be resolved or solved in a fast track manner. Okay? Here, these 5 points are very, very important. The governor says that we have to focus on these 5 things. Firstly, RBI governor says कि भैया RBI and banks should not work separately, rather they have to collaborate with each other. That means there should be systemic resilience, there should be shared effort from both the sides, from both the banks and RBI side. They have to focus together in doing some regulation and supervision. Supervisory action should be corrective and not punitive. Punitive matlab penalty lagana, more and more penalties, है ना, which creates a fear kind of a situation in the economy. Rather than that, we have to help people focus on correction and improvisation. This is important. Thirdly, RBI uses many portals like CIMS, Daksh, Supervisory Data Quality Index. This data is utilized to understand what is happening in the banking system, in the financial system, and accordingly, solution can be taken up. Fourth, customer centricity. That means we have to work for the customers, ensure their safety, ensure their security. And at last, we have to focus on capacity building so that with the evolving technology, with the evolving kind of threats, people are competent enough to resolve such issues. So, governor is saying focus on these five pillars. These are the fundamentals that we have to focus on. Supervision should be a collaborative effort to ensure long term stability and growth. Supervisory action should be corrective in nature. We have to guide them. We have to focus on capacity building. Right? Fine. Penalties should be last resort. बहुत ज़्यादा penalties मत लगाएं. Effective use of supervisory data. So, whatever data is available, for example, we collect data through CIMS, Daksh portals, and all. Supervisory data quality index. We collect all of this data, but this data should be used properly, comprehensively to provide services to regulate and supervise. Okay, we need to use subtech and AI too. Subtech is supervisory technology. What is the meaning of supervisory technology? That we should use AI and other technology products in order to improve our supervision as well as regulation. Plus, we have to focus on customer centricity in the digital age. Customers, digitalization should improve inclusion and convenience. Fraud should be controlled. Frauds should be controlled. Cyber threats should be controlled. Protect the consumers. These are the five principles that you have to focus on. And at last, we have capacity building for the regulators and institutions so that they can become competent in resolving such problems. Okay? So, what do we have to do? What do you have to remember from here? We have the core principle of risk based regulation and supervision remain unchanged. That means core principles are these five principles that we have mentioned. If we have to ensure that, in the current new kind of risks and all, so that people are, safe, secure, in that case, we have to follow these five principles. So, these five principles are very important. Please learn them. You can get a question there, you can write down. ठीक है. Good evening Appu. चलो. So this was your first article which Sanjay Malhotra ji said. ठीक है. Fine. Second is by Sri Swaminathan ji, issues and challenges in banking supervision. So you can get a question in your exam that what are the challenges faced by the regulators or banking regulators. What are the challenges faced by the regulators in the digital era? है ना? Financial regulators in the digital era. Suggest solutions. So, the first article was suggesting solutions, the five pillar approach. This is the solution, the five pillar approach as given by Sanjay Malhotra ji. He identified that the risks are changing. Accordingly, this is what we have to do. The five pillar approach that we have to follow. है ना? And the risks, what kind of issues and challenges, you can take points from here. So a lot of points have been mentioned over here. For example, these five types of risks have been mentioned here. Very important, please learn it. In this question only they can write down just say what are the challenges. So you can say that the landscape of risk is changing, the types of risks are changing. The first important factor is types of risks are changing. For example, first risk that we have is risk related to speed. For example, digitalization, say, because of digitalization, it has become so easy for everyone to get to know about any kind of fraud that is happening, and then problem of bank run can happen immediately because digitalization may immediately steps are taken. So stress, risk, it can spread very easily because of digitalization, and that is why the nature of supervision and regulation must change. Second kind of risk is a concentration risk. Concentration risk is when you are dependent upon, say, just one company say for cyber security things and all, if you're or for any kind of for any work, if you are relying only on one company, for example for cloud services, you are relying only on one cloud service provider, then if some problem occurs or if that cloud service provider fails, then it is going to impact the entire financial system. Concentration risk, relying on one specific kind of a company or specific kind of a business. Thirdly, algorithms and AI risk, है ना? While efficiency improves, there are issues of accountability. For example, if AI makes a mistake, in that case, who is responsible? If AI makes a mistake, then who is going to take the responsibility? Who is going to take the accountability? Who is going to explain in that case? Right? Then cyber and operational risks. Threats are organized and persistent. Resilience and recovery are core capabilities. Now, for cyber and operational risk is another problem. Cyber threat is another problem. These are the new kind of risks that we are seeing. Digital conduct risk, for example, somebody is mis-selling, opaque charges, aggressive recovery practices. This can lead to underconfidence, है ना, escalate liquidity risks and all also. So these are the new kind of risks. So if you get challenges that the regulators are facing in the digital era, you can firstly talk about these kind of risks. That the risk system, you can see that these are the kind of risks which we are suffering from as of now, and these risks need to be resolved. The problem of these risks need to be resolved then. And that is why there is a need to shift the mindset. Supervision mindset needs to be shifted. Supervisory techniques should be different now. They should be shifted. For that, four fundamental principles are very, very important. What are the principles? Firstly, regulate the risk, not the brand. That means tech neutrality. Don't focus on who is providing the problem. You have to address the problem itself. You have to address the risk itself. ठीक है? Proportionality, calibrated to size and complexity, based on the complexity and the size of the firm or the size of the problem, the complexity of the problem, accordingly take some action. One size fits all approach नहीं होना चाहिए. Then banks remain responsible for the vendors. You have to ensure the accountability. If you are making some mistake, please be accountable for that mistake. And be forward looking. That means think about the future. Be far sighted, not short sighted. ठीक है? Fine. So your focus areas should be on concentration risk, operational resilience, governance. Be fair enough. Ensure fairness. ठीक है? So we have to have technology enabled continuous supervision. So we need to focus on, we need to move from periodic inspections. The old framework was periodic inspections. We need to move from periodic inspections to technology enabled continuous supervision. Continuous supervision. So we have to focus on what? Continuous supervision. And what we can use? We can use subtech and analytics. Subtech, there is something known as subtech, which is supervisory technology. Supervisory technology, and there is something known as regtech also, which is regulatory technology. Both of these things mean that we need to use technology in order to improve supervision and regulation. Okay? And secondly, grievance handling is very, very important. Grievance redressal is a very important factor. Only that is going to ensure customer centricity. That will ensure customer centricity. Okay? Fine. So this is the important framework. So that means we have to have a forward looking oversight. We need to ensure trust, accountability and quick corrective action. Okay, so at the end of the class, I will give you a question. You can write down the answer to that question and you can share your answer with me on Telegram. If there is anybody new here, you can join me on Telegram. Mannat Educator is my Telegram handle. Just type Mannat Educator. You will have access to my group. The name of my group is Economics with Mannat. Okay? Fine. So now these two articles are very important because the first article is giving you a 5-pillar approach to solving the current problem of regulation and supervision. And second talks about first the issues, the changing kind of risks, and the solution as well, the fundamental principles that you can follow. ठीक है? Fine. I hope you guys are understanding what we are doing. ठीक है? चलो. Next article is by Shirish Chandra Murmu, who talks about the issues, opportunities, and challenges again in the digital era. So again, there are certain challenges for you can use these challenges also in your answer. Okay? These challenges can also be used in your answer. For example, regulatory agility. So, firstly, machine speed transactions reduce reaction time for regulators. See, what happens is that problems and frauds can happen in minutes, but solving the issue takes time. That time needs to be reduced. So, we have to ensure, regulation has to ensure durability with responsiveness. Yes, we have good solutions, fine, but the responsiveness should also be very fast. So, how can we ensure this durability with responsiveness? That is one challenge which the regulators face. Second, blurring of regulatory parameter, which means that digital finance involves regulated and unregulated entities. So there are entities which are regulated. Unke liye to we don't have any problem. But there are some entities which are unregulated. There is no regulation and supervision in that case. That means there is fragmentation oversight. Fragmentation, that means इसको देखें या इसको देखें. Fragmented oversight. In that case, what does RBI do? RBI follows a hybrid approach जिसमें FSDC, Financial Stability and Development Council, it collaborates, regulates, and accordingly we try to solve any kind of issue. Third challenge is related to the nature of regulation. Okay, so basically the risks have changed. The risks that usually RBI or other regulators used to focus on, they have become obsolete. That is why now we need principle based rules. They need strong governance and supervision. Okay, so there should be clarity without rigidity. That means there has to be flexibility also, and there has to be regulation also. So how to balance regulation and flexibility, that is a question in hand. Then financial stability concerns. We are focusing on cloud, on the cloud services and a platform finance, AI increase. Because of that, what is happening is that there is a chance of systemic risk. Systemic risk means when one problem, it spreads to different sectors. है ना? So when technology is outsourced, when we are outsourcing technology, किसी और से outsource कर रहे हैं, then who is going to take the accountability? For example, if technology is outsourced by RBI from someone else, who is going to take the responsibility? RBI or the other person or the other institution from where we are taking up the technology or outsourcing technology? That is a question. Operational resilience and communication. Clear and timely regulatory communication is essential. Very important. Communication is very important. Only then people are going to be confident in the banking system, in the financial system, and that is one concern. That is one regulatory channel. Right? And capacity constraints then. So obviously capacity building is an issue. And our technology, data analytics, we need professionals in this case, and that is why skill development is very important. But yes, do have some opportunities for regulation. For example, we can use subtech and regtech adoption. We can adopt these to solve the current risks and solve the current problems, current supervision problems, regulation problems. RBI has developed this MuleHunter.ai. This is RBI's machine learning tool. So what is this for? Mule. What is mule? Mule का मतलब होता है fraud accounts, fake accounts, right? This means fake accounts. So we are so basically MuleHunter.ai, it tries to detect the mule accounts, fake accounts. ठीक है? Then we have Prava portal. We have Daksh portal as well. These are the portals which RBI uses to solve the current risks. These are the opportunities. So what are the guiding principles for digital era regulation? You can add this also in your answer as a solution, that we have to focus on public interest, financial stability, risk based and proportionate regulation, clear accountability, outcome oriented, adaptive and resilience focused framework. This is what our focus should be on. Okay? So these were the speeches which were mentioned in the RBI bulletin. Okay? Then there are two articles over here. We need to understand those articles. This will give you a clear picture of what is the state of the Indian economy. Firstly, we have state of the economy. Secondly, the financial shocks and flow of funds of Indian economy. This we are going to talk about. So what is the state of the economy? We have read it everywhere that India is one of the most resilient economies. That is what we are seeing. Despite the geopolitical tensions, despite the geopolitical issues like tariffs by Trump, Venezuelan crisis that we saw because of US, what is happening in Iran, what was happening related to Greenland, what is happening in the Middle East, what is happening around the world, Russia Ukraine issues, है ना? Then Russian oil sanctions, है ना? So, despite all of these problems, India has shown resilience. Our growth is also good, inflation is also controlled. We are in a rare Goldilocks era. ठीक है? So, IMF in its January 26 update has revised global growth from 3.3% for 25 and 3.3% for financial 2026 as well. So it has revised upward 3.3%. World Bank also revised for 2025 to 2.7%, 2026 2.6%. So both World Bank and IMF have revised the global growth upwards. Okay? And you can see over here that for the world, you can see here Jan 2026, what is the update? 3.2% for 2020, for 2027. ठीक है? And for Jan 2026, 3.3%. Right? World Bank has also updated 2.6 and 2.7 percent for previous year and for current year. ठीक है? Then emerging market and developing economies. Let's talk about India over here. India ka is important, है ना? So India ka 6.4% according to IMF for 26 and 2027. Right? And World Bank 6.7, 6.6. This is India's scenario. This is what you have to learn and remember from here. Scenario of India according to IMF and World Bank. ठीक है? Global composite PMI fell to 6-month low in December. Here what you need to understand, what is purchasing managers index, PMI. Is anyone aware of what PMI is? We are talking about global PMI which fell to 6-month low in December. What is this purchasing managers index? New export orders contracted, new export orders reduced. India and China showed expansion. Overall economy में PMI reduced, but India and China showed expansion. So what is this purchasing managers index? What we do is we take the survey of businessmen, of industrial leaders, of the purchasing managers, and we ask them that what do you think is the scenario of the manufacturing sector? What do you think is the scenario of the services sector? Do you think that it is going to expand? How is your business confidence? If the value is greater than 50, it indicates that there is going to be expansion. If the value is less than 50, it indicates there is going to be contraction in the services sector or the manufacturing sector. If it is equal to 50, it shows stability or neutral. No contraction, no expansion. So here we are saying that it fell to a 6-month low. Global PMI fell to a 6-month low, but in India and China, we saw expansion. So that is a good thing for India. Fine. Fine. Then, what are the global headwinds or the global issues, and what are what led to India's resilience? So risks. So we can see geopolitical risks like U.S. intervention in Venezuela. We have seen that Middle East conflict, Greenland. है ना? So we have all of these issues. Monetary policy divergence across central banks. So there are different central banks. Central Bank of India, then Central Bank of U.S. Fed. We have European Central Bank. All of them have different stances, different monetary policy stance as of now. And related to trade also, tariffs and all, US tariffs and all, supply chain disruptions, supply chain issues and all, है ना? So international level पे a lot of issues are there, but India has shown resilience, India has shown robust growth, GDP projection is good, inflation is controlled. And what are the drivers of growth? Majorly we know that AD is equal to C plus I plus G plus X minus M. Expenditure method के through we calculate GDP through this formula. So so the major drivers of aggregate demand and GDP growth is consumption and investment, private final consumption expenditure and fixed investment. These two factors are very important and they have led to increased GDP growth. Okay, fine. So you can see here this is S&P Global Composite PMI and this is PMI export orders only. So composite PMI, you can see here this is the scenario. This is a December 2025. We have seen a contraction only, lower from every country's end, है ना? बस इंडिया में we have seen expansion, इंडिया में we have seen expansion. ठीक है? Export orders also declined in every country. Export orders have been declined. You can see the negative side of this because of these Trump tariffs and all, है ना? ठीक है? Then if I talk about global inflation and financial markets, inflation in advanced economy eased, है ना? In most advanced economies eased but remains elevated. So if I have to contrast, we have advanced economies which are developed economies on one side and we have emerging market economies. So advanced economies like US, Canada and all, वहाँ भी inflation ठीक है, it eased, it reduced but not very much, it was still high. ठीक है? But in emerging market economies like India, inflation eased a lot. It moderated in Brazil, Russia also. It reduced in India as well. ठीक है? Inflation was controlled. If I talk about financial sector developments, then global bond yields hardened, मतलब increased. है ना? Then Japan's rate hike was also seen. And these bond yields and all, they usually are high when there is global uncertainty. है ना? Global uncertainty, so people start shifting towards bonds and all. Right? Fine. Then if I talk about the domestic economy showed resilience, है ना? 25-26 के लिए real GDP growth is estimated around 7.4%, which is a very positive thing, which is a good thing. ठीक है? And major drivers demand side में we have private final consumption expenditure and fixed investment. Like I told you, from demand side we have AD is equal to C plus I plus G plus net exports. So C plus I, these are the drivers of growth. Aggregate demand increased, economic growth increased because of consumption and investment. ठीक है? And consumption and investment largely increased because income tax cuts we had seen in the country, GST rates rationalization we have seen, repo rate has reduced, cash reserve ratio rate has reduced. So we have seen all of these changes which led to an increase in consumption, which led to an increase in investment as well. फाइन. इफ आई टॉक अबाउट सप्लाई साइड, देखो एक टू तरह से वी सी फ्रॉम दो तरह से वी सी, डिमांड साइड एंड सप्लाई साइड. डिमांड साइड में वी टॉक अबाउट द एक्सपेंडिचर and supply side mein we talk about the value addition by the different sectors, primary, secondary, tertiary. So here manufacturing and services sector have shown strong performance. ठीक है? And if I talk about demand conditions, then rural and urban, rural में तो demand increased a lot and urban में also we are seeing a revival. So demand conditions are also good. If I talk about government deficit indicators, you can see what you have to remember is majorly the fiscal deficit over here. So for the center, if you see gross fiscal deficit, this is for 24-25, 2024-25, and this red one for 2025-26. So center ka fiscal deficit has increased. But let me tell you a very important fact over here. Even though the deficit has increased here, but it is largely due to increased capital expenditure. So government has increased the capital expenditure, which is again a good thing. This is a productive kind of an expenditure. Okay, capital expenditure is productive expenditure. It is productive in nature. Fine. Then, so this is gross fiscal deficit of the center has increased, but for the states it has declined. Okay, fine. Then this Shanti bill has been reduced. What is this Shanti bill? This is basically in the nuclear power sector. We have, the government has opened this nuclear sector for the private sector, and today only in the Mint newspaper there is this news that Adani Power is the first privately owned company which has publicly shown interest in this nuclear power sector. So now the private companies can also focus on nuclear energy and produce electricity through the nuclear energy. So Shanti bill has been reduced, and that is so that we can have more and more private participation, so that we can scale up our clean energy and we can ensure energy security. ठीक है? Fine. So this is sustainable harnessing and advancement of nuclear energy for transforming India. Shanti full form. ठीक है? So this is basically, the objective is 100 gigawatt nuclear capacity by 2047. This is the objective. We have to reach 100 gigawatt of nuclear capacity by 2047. So this is our 2047 long term vision of ensuring and becoming a Viksit Bharat by the year 2047. Then, if I talk about the inflation dynamics, headline CPI inflation edged up in December below the lower tolerance level. So, what is the tolerance level? Here we are talking about the flexible inflation targeting framework. What are we talking about? Flexible inflation targeting framework, which is between 2 to 6%. Ideally, our inflation should be 4%, but it can be as low as 2% or as high as 6%. We have to maintain it. But inflation fell below this 2% mark also. ठीक है? And that was because mainly core inflation was stable. है ना? So basically there are two types of inflation here: headline inflation, core inflation. Headline inflation is the overall inflation which we talk about everything. We talk about automobiles, we talk about food, fuel, energy, we talk about everything here. Core inflation we calculate when headline inflation minus, we subtract the volatile items from headline inflation. What do we get? Core inflation. So all these volatile items were also stable. Food, fuel, energy, they were stable. ठीक है? Fine. And the CPI base year has also changed. I hope you guys are aware. CPI base year has also changed from 2012 to which year? Who's going to tell me? Write down in the comment section and tell me what is the new base year of CPI. ठीक है? So headline CPI edged up in December. Core inflation rose to 4.6% in December. Food prices policy repo rate. Uh, 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 no, this is old. है ना? This is the previous one. Okay, we are not going to focus on this part over here. ठीक है? So policy rate, repo rate also changed. So this is data for the previous year, 2024-25, which is none of your business over here. You just focus on this particular thing here. ठीक है? हाँ, 2024, very good. So 2024 is the new base year of CPI. Okay. Then if I talk about financial conditions and credit, financial conditions, firstly, if I talk about money and bond markets over here, weighted average call rate traded above the policy repo rate but within the corridor. Now what is this weighted average call rate? देखो, एक तो है, we have repo rate. One is repo rate. What is repo rate? The rate at which commercial banks can take loan from RBI. The rate at which commercial banks take loan from RBI for an overnight purpose in exchange for securities. है ना? Fine. So what is weighted call money rate? What is call money rate? Ki if you don't want to take up money from RBI, the commercial banks, they can take from each other also. At which rate? At this weighted call money rate. Now, this weighted call money rate should not be very, very divergent than the repo rate. It has to be near about the repo rate only. In fact, it has to be in a policy corridor. There has to be a policy corridor. What is that policy corridor? We have SDF, standing deposit facility rate, and we have marginal standing facility rate. So, and this is repo rate in between. Repo rate is 5.25% right now. MSF or bank rate, you can say. They are always they're always higher than repo rate. So if 5.25%, if our repo rate is 5.25%, it is going to be 25 basis points higher, 5.50%. SDF is going to be 25 basis points less, so it is going to be 5%. So the weighted average call money rate should also be between this 5 to 5.50% only. That is what this line is saying. Weighted average call rate traded above policy rate. It is a little above the policy rate, but it is below the policy corridor. That means it is within the policy corridor between 5 to 5.5%. ठीक है? So SDF is standing deposit facility rate. This is also like short term loan only. This was introduced, short term loan, overnight loan, just like repo rate, but it does not require any collateral. No collateral. I hope you know about this. And marginal standing facility rate. This is the upper end of the corridor, which is a penal rate, which you take up over and above this repo rate. So repo rate के लिए आपके पास securities, if you don't have enough, then you can take it at a higher rate from RBI, which is known as the penal rate. ठीक है, तो these are some basic static portion that you should already be knowing. So from here what you can do is, your homework is you're going to read about the monetary policy tools. ठीक है, you're going to read about the monetary policy tools, all these repo rate and all quantitative tools. This is your homework, quantitative tools. Please read about these. Fine. ठीक है. Fine. Then comes credit and deposit. Bank credit and deposit growth increased in December. So both bank credit growth also मतलब पैसा देना by the banks, and deposit growth means पैसा लेना by the banks. Both of them improved, but obviously the credit growth was higher than the deposit growth. ठीक है, and credit growth was higher. Why? Because the repo rate reduced, so banks also reduced their rate of interest. Fine. Then if I talk about the financial flows to commercial sector, that who gives money to the commercial sector, where do these commercial sector get money from? So non food bank credit, you can see. Then we have non bank sources like domestic sources, foreign sources, and total flow. So you can see over here that non bank sources like corporate bonds and FDI, we have bank rate, we have personal loans, we have vehicle loans. We have seen a steady expansion in this case. The total flow is around 30.8 lakh crore money. It has been flown to the commercial sector. Fine. Then if I talk about the external sector developments, then external sector is also stable and resilient. Okay, we have improved our position in the international investment position. Foreign exchange reserves are good. We have 11 months of imports तक के financial reserves, forex reserves, है ना? And our external buffers were also good enough. ठीक है, fine. So these are your foreign portfolio investment. We basically saw net outflows, but if you see the current scenario as of now, in February we have seen FPI inflows also now again. And वो inflows कब आए? When this interim trade framework between US and India, this trade deal has kind of been discussions have been taken up, तो उसके बाद FPI started coming inside of the country. So basically at the external level also, at the international level also, we have shown strong fundamentals. Forex reserves are good, deficit is controlled, everything is controlled as of now. Fine, you can see the real GDP growth as far as this bulletin is, talking about. We can see here 7.4% growth. This is what you have to remember over here. See for 25-26, 7.4% growth, GDP growth we can see here. So this is from the demand side. Demand side. From your supply side, 7.3% growth. Okay? From the supply side, gross value added. Right? Fine. Right, so flow of financial resources across sectors of Indian economy. This article talks about that. So we have seen an expansion in the financial flows like we saw in the previous 2-3 slides over here. So flow of funds is basically how funds are being flowing, from where the funds are being flowing to the institutional sectors. So what is it basically? That households, what you have to remember is that households are the major suppliers of funds. Who? Households. They provide money to the intermediaries like banks or financial institutions, which further provided to the corporate sector or the borrowers. That is how flow of funds is happening. So what you have to remember is that maximum major supplier of funds is which sector? It is the household sector. Okay, this is what you have to remember. Fine. And if I talk about the overall scenario, of our country, economic growth, nominal GDP, we can see 12 around 12% we can see nominal GDP could grow with that. Financial assets we can see expansion around 13.9%. Financial liabilities have also increased, but financial assets have increased more than liabilities. And when assets are more than liabilities, this is a positive situation for any kind of economy. ठीक है? And share of financial assets are maximum with the financial corporations and then the households. ठीक है? So households and financial corporations, they hold maximum assets, and financial corporations and these private non-financial companies, you can say, they hold together the maximum liability. So you should know that who holds the maximum wealth, if I have to talk about that. Fine. So assets maximum with households and financial corporations, and the debt, and those who take debt, financial corporations and the private NFCs. So household, what you have to remember is that household sector, it is the surplus sector which provides maximum money. The maximum source of funds is from the household sector. Okay. Fine. So we have financial surplus which is unchanged at 5.2% of GDP. And financial corporations are the main intermediaries. So who are the main intermediaries? जिसको households provide their money, financial corporations, corporates and the government. ठीक है? They are the intermediaries which hold the money. And who are the borrowers? The non-financial corporations. So basically the households are the suppliers who supply to which intermediaries? In which intermediaries? Financial corporations, which supply to who are the borrowers? The non financial corporations, majorly. This you have to remember here. Okay, so non financial corporations can be private NFCs or public NFCs. So private NFCs have been the net borrowers. Private sector, that means private sector has been the non financial corporations have been the net borrowers, and who are the net lenders? It is the public non finance corporations. Okay, fine. And the government also remained a net borrower. So government also is the net borrower, and that is majorly because government's expenditure is always greater than revenue. But this borrowing which is done by the government now, this is also for capital expenditure, maximum for capital expenditure. We have seen an increase or a growth in capital expenditure, which is a productive kind of expenditure, which is productive. Okay, fine. So the general government, they're also focusing on path of consolidation. They are trying to reduce the fiscal deficit. They're trying to reduce the fiscal deficit. So if you see the fiscal health of the government, it reduced by 5.5% of GDP. Deficit reduced. Total debt also reduced to 83.7% of GDP as compared to the previous years. 73.5% of liabilities are government securities. And asset side may also we have seen increased capital infusion. So basically the financial consolidation is good. Financial gap has actually reduced. Okay. Then if I talk about the sectoral heat map, liabilities or borrowings, financial, this is the financial sector, this is the real economy. So we can say that financial sector, financial corporations and mutual funds, they are booming a lot. Households are steadily putting their money in deposits and all, and finally giving it to the lenders, है ना? Then banks also have high deposit mobilization, and they are also providing good enough credit to the people. And public corporations and government, they are also using a lot of money. They are borrowers, net borrowers, and they are also investing in the economy. Okay. So this flow of fund highlights that our risk absorption capacity has improved, our assets have improved, our liabilities are less than our assets. So overall our financial stability is good. So overall our financial stability is good here. Okay. So we are very, very optimistic as of now. The economy is one of the fastest growing economy despite global and geopolitical tensions. Our banks are resilient. We have good, strong capital buffers, and the regulator is also focusing on continuous supervision via subtech and partnership. So what you can remember is, firstly you need to know the state of the economy. What is the situation of state of the economy? We are very, very resilient. That means our GDP growth is also good. Our inflation is also controlled. We are in a Goldilocks period. Firstly, that. Secondly, if I talk about state of the economy, our external sector is also performing well. We have good enough forex reserves. Our deficit, trade deficit, is also controlled. Then, if I talk about the financial sector, we can say that it is robust. We can see stability here. Our assets are good. Fiscal consolidation is also good. And our FPIs are also returning. Investment and your private consumption, private final consumption expenditure, these are the drivers of growth. है ना? Flow of funds are also very robust. Flow of funds are also very robust. Our manufacturing and services sector, in both of these manufacturing and services sector, we have seen a boom. Our PMI improved, and as compared to the other countries, we are the fastest growing economy, है ना? If our manufacturing and services also boomed, our GDP increased, our GVA has also increased. GDP 7.4% for previous year, GVA 7.3% for the previous year, which shows proper robust activity, economic activity in the economy. So overall state of economy is very very good and resilient. But our financial sector, if I talk about the financial sector, and if I talk about the financial sector, we know that the risks have changed. Risks have changed. है ना? They were first the old kind of risk that I showed you in the initial slide. Old risks were basically about loans, about capital, about liquidity. But now the risks have changed, and now the risks are basically related to technology. It is related to AI. It is related to cyber threats. It is related to data, and that is why there is a need for change in the supervision. There is a change in the supervision which is required. So supervision and regulation should be changed, and for that we need to use subtech and regtech technology. Here I am going to give you this this easy manner how you can remember this in a very easy manner, what was mentioned over here. Let me show it to you over here. Follow this PPP model. So basically RBI governor said PPP model has to be followed. P for partnership, P for prevention, and P for protection. This is what the RBI governor and the other speeches have said. Focus on partnership, which is partnership between the regulator, which is RBI, and the bank. So there should be proper partnership between the two to solve problems, and a collaborative approach is required. Prevention of any kind of fraud related to AI, related to data, and for that, continuous monitoring is required. Continuous monitoring is required. And protection, for that, customer safety, fraud control should be there. For that, grievance redressal mechanism should also be there. So, what you can remember for your answers, that PPP model should be followed. That because there is a change, there are challenges in the AI for the regulation, for the regulators, there is a change. In the regulation supervision, that is why what we have to follow is we have to follow a PPP model. What is this PPP model? Partnership, prevention, and protection. This is what you have to follow. And we have to use regtech and subtech technology to improve the performance, supervision, and monitoring of the economy. Fine, everyone. So, this is the crux of your bulletin. These two pages are very important. This and this part is very important. This is the crux of the entire bulletin that I have shared with you. Okay, remember this. These are the bullet points that you have to remember from your exam point of view. Fine. Apart from that, if you guys want to, be a part of the RBI Grade B 2026 batch, this way only we complete the entire course. This way only we want to study everything. Classes, books, downloadable magazines, current affairs, everything will be available to you. If you want, you can enroll now. So that is all from my side, everyone. Thank you so much. If you guys want to connect with me beyond these sessions, then you can connect with me on Telegram. Mannat Educator is my Telegram handle. Okay? So basically, economics with Mannat. This is the name of my group. You can connect with me over there. If there's any doubt, you can always, uh, you know, uh, ask over there. Fine. So if there's anything that you want to ask, you can ask me. Otherwise, I'll just end the session here. Thank you so much, everyone. I wish you all the best, and I'll keep coming up with such sessions. I hope that you guys have understood. Now it's up to you how you have to utilize the material in your exam, in your answers. For the question that I told you I'm going to give you, I will post the question in the Telegram group. So please check it out and try to solve that answer and share your answer with me. Okay? Thank you, and I have a great